Hey everybody, my name is Kenneth and I talk about the stock market, day trading, swing trading, and investing. I also talk about minimalism. So if any of that stuff is interesting to you, smash that follow. If you're watching this on YouTube, hit the subscribe, the bell, and the notifications and all of that below. I was asked by someone who follows me on TikTok if I could make a video comparing two real estate service companies, Redfin and OpenDoor technology. Now, if you've been following me for a while, you probably know of my website. The link is here or there or wherever. It's just my name. It's kennethsuna.com. And in the menu, and I get a lot of people who follow me who are a little older, and I say, find it in the menu. And they go, I looked, I couldn't find it. The menu, if you're on your phone, is probably going to be down here somewhere. It's those three bars. And if you're on your computer, it's probably going to be the three bars up in the left-hand corner on the top. Click on it. There are two guides that are totally free. You're probably going to see them in photos behind me right now. One is my do your own research guide. It's just loaded with all the websites that I use to do my own research. And the other, which we're going to use in this video comparing OpenDoor to Redfin, is my stock template, my fundamental analysis template, I should say. Now, both of these companies are interesting to me, and we're going to look at them using my template right now, which you'll also probably see on the screen. And while this is happening, we're going to be looking at some information on these two stocks. So let's get started. Okay, now we can begin. So now I'm going to be looking both ways because I kind of like this approach. And it's a much higher quality video and audio because I have the microphone than talking with the video on my computer screen. So we're on my website right now. I'll move my drink so I stop hitting the straw. And menu, click on it, fundamental analysis template. It opens right here. This is what the template looks like. And by the way, there are going to be other things in this template that aren't in this template. Sorry, I keep hitting the straw. I thought it would be a good idea to have a drink so I could stay hydrated and energized with my matcha, and now all I'm doing is hitting the straw every time. There's going to be other things that we're going to want to look at. I made this template to fit one page. I didn't want it to be some 10-page template. But there are going to be things we're going to be looking at that aren't on this template that you want to be considerate of as well. So it is clickable. You're looking at it right now on the computer screen glowing. This isn't clickable. If you click right here where it says, and here's the link, it'll open, and this is a blank template that you can fill in on your own. Whole point of me having this channel is to teach people how to be self-sufficient traders and investors. So if I'm doing all the work for everyone, no one's ever actually learning. So that's what the point of this template is. Now I have one all fully done up comparing OpenDoor to Redfin per the followers' request on TikTok. And these are the websites that I'm using. You can see them right here. It's Seeking Alpha. We've got my template, which is all filled out. Market Watch, which I love for their financials. And last but not least, Tip Ranks to look at one-year price targets. Now, I'm also going to show you a screenshot at a certain point in the video of my Ameritrade page because it has some more useful information that is not in this template, but I think would still be of information. So I'm going to close this one. We'll start here now with the video. So the first thing we notice is that Open and Redfin are both real estate services. OpenDoor is $4.48 and Redfin is $10.32. However, let me see if we can zoom in here. Over the last 1, 5, and 10 years, we can't go back that far because both of these companies had their IPOs somewhat recently. And you can see that in the last 1 year, OpenDoor is up 296% and Redfin is up 142%. But in the last 5 years, we don't have any of that information for OpenDoor because they only went public a few years ago in 2020. However, since going public, the stock is down 60%. However, so if you would purchase a stock on IPO day, you'd still be down 60%, despite the fact that it's up 296% this year alone. Jumping over to Redfin, however, we can see that in the last year it's up 142%. In the last 5 years, it's down 28%, and it's down 60% since their 2017 IPO. So as with all things in the market, it depends on when you bought it. If you bought it on the IPO, you're sitting on a loss, and you probably hate it. If you bought it within the last year, you probably are doing very, very well. Now, the next thing I think people are going to wonder a little bit about here is the market cap. How is it possible that OpenDoor is $4 a share and they're worth $3 billion, but Redfin is $10 a share and they're worth less? They're worth $1.21 billion. And the answer comes down to their shares outstanding, which I'm sure is somewhere on one of these pages, but to be honest, I don't know because I use TD Ameritrade. Let's see here. It'll probably be out here. Okay, shares outstanding. So OpenDoor has 670 million shares on the market, and Redfin 670. Redfin has 115 million shares. So that can kind of explain to you how OpenDoor is worth more. They have more shares on the market. Now, neither one of these companies pay dividends. So all this stuff can be nixed. We're not going to look at that. Now, up next, we have the price to earnings ratio. The industry average is 35 times. Now, since these companies are still new and many of them still don't have their revenue fully listed, so I took these two screenshots to show you OpenDoor and Redfin. Actually, let me put it in the way that it looks like in the actual order of the video, since OpenDoor is first and then Redfin is second. You can see here that, so I said 35 for the price to earnings ratio. It looks like on TD Ameritrade it says that it's negative 32 for the industry standard. I think that is an error, but we can double check that later. It says for the same thing, because the earnings for Redfin and OpenDoor are not available, we're going to use price to sales and price to books instead. And then it'll say down here, Redfin seems fairly valued with a price to sales ratio of 0.96 that is in line with the industry median of 1.07. Although their price to book is 206, which is among the highest in the industry. And you can see price to book for Redfin, the average is 5.59, and it's extremely overvalued. And we come over here and we see that it says here, Open Table. I keep calling it Open Table because I eat out a lot, and so I use Open Table for reservations. OpenDoor seems inexpensive with a price to sales ratio of 0.34, which is below the median of 1.07. However, the price to book is 2.94, which is above the median. So because we don't have the price to earnings ratio, which is more popular for these kind of things, Ameritrade is having us look at other things like price to sales and price to book. Now let's jump over and look at the revenue really quickly. Revenue for these two companies is interesting because both of them are having growth. However, OpenDoor's growth is massive and in the billions, pretty much going right back to 2018, 1.84 billion, 4.74 billion. Then we see a big decrease around the COVID period, which is an anomaly, to 2.58 billion. Then we see 8.02 billion in 2021, and then a massive jump for 2022 of 15.57 billion. Now, one of the things that I like on Seeking Alpha's website is if you go down a little bit, you'll be able to see the revenue, and you can see this massive jump here. But look at the estimates for 2023 and 2024. Decrease and decrease. So they had some growth, and it has now since begun to slow down. This is a little bit concerning. And then we jump over to Redfin, and we can see that their revenue was in the millions, hundreds of millions, but still, it took them a while to get to 1.92 billion, which is where OpenDoor was in 2018. Redfin didn't hit $1 billion in revenue until 4 years into the game. They hit 1.2 billion, and then in 2022, 2.28 billion. Now we can see here that unlike OpenDoor got at that time, that had a big decrease in revenue in 2020, Redfin didn't. 779 million, and then in 2020, 886 million. So interesting. Net income, however, is not great for either of these companies. They're not holding on to their money. Net income for OpenDoor was 1.35 billion negative. And for Redfin, it was negative 321 million. Now, this is the thing we wanted to look at that I didn't fit into this template here. But if we go on, let's do OpenDoor first. Open. And we click on financials. And we're going to go to net income. I forgot what we were looking at. Net income, which by the way, will be under the income statement tab. Net income, we want to look while we're doing this research, even though the stuff that's going on the template might only be the last year or the last 2 years or whatever, we still want to get an overall gauge of what's going on with their net income. Is it improving? And for OpenDoor, it looked like it was improving a little. They had a loss or negative 341 million. And that was in 2018. No, that was 2019. And then 253 million, and then 662 million. So it got a little bit better, and then it got a lot worse. And then it went from net income of a loss of 662 million to 1.35 billion in a loss, negative net income. Not great. And then we can go up here and we can do Redfin as well. So even though on the template it shows net income, it is only showing the 1 year. This is the kind of thing that you have to pay attention to when you're doing your research and looking at these numbers. We want to see that net income either going up or going from a negative to a positive. And now for Redfin, we can see that it's also a little bit all over the map here. 41 million loss, 80 million loss, $18 million loss. So you can see that year got better, which was what, 2020. In 2021, though, dramatic increase in losses for their net income. And then again, even worse net income for 2022. So these are not the direction we want to see these numbers going. Not great. Back over to the template now. We have total assets. OpenDoor has 6.61 billion in assets to Redfin's 1.57 billion. So OpenDoor wins. They have way more in assets, but they also have way more in debt. And what's concerning to me is that OpenDoor's debt, 7.11 billion, is more than the company is worth. It's more than their market cap. That's not great. Whereas Redfin has long-term debt of 1.27 billion, and their market cap is 1.21 billion. So also not great. However, we can see that both companies are paying down their debt a little bit. However, the fact that both of them have debt that's worth more than the company is a big old red flag for me. Cash and investments, OpenDoor has way more, 1.94 billion to 364 million for Redfin. Free cash flow is 693 million to Redfin's 18.96 million, so way less in free cash flow. Way less in cash in general for both of these companies. And if you're wondering what the difference is, the cash is the money they have left over. The free cash flow is money that's coming in but is also going out. And then we've got their 1 year price target, which is not great for either company. And the website that I'm using is TipRanks. And so we can see Open, type in Open, it'll pop right up. We can see here that Open is $4.48, and they have a consensus 1 year price target of $2.66, which is down 40%. 6 holds, 2 sells, 1 buy. Not great. And then we'll hop over to Redfin next, and we'll take a look at theirs. Also down 32%. That's a target, by the way. It's not a guarantee. Just because the analysts have a sell order or a highest price target doesn't guarantee it's going to hit. Analysts are right about 30% of the time. So this isn't a guarantee here. We're not expecting that because it says this that it will hit it. It's just giving us an idea. And you can see, look, there were 9 analysts covering OpenDoor, 10 covering Redfin. So pretty much similar, and they both have hold ratings, with the overwhelming majority of the analysts saying hold the stock. What does hold mean? It means if you own the stock, you're not buying more, you're not selling what you have, you're just holding it. But Redfin also has 2 sell orders and an average price target of $6.94. So now we can come back here and we can look at and compare all of these numbers. Who has the bigger market cap? Who has the better price to earnings ratio, which in this case, neither. Who has the better dividend, which in this case, neither. Who has better revenue increases? It would look like OpenDoor has way better revenue increases. Net income, total assets, who has more? These are all the things you want to do as an investor before you make your decision. Now, because I can't give financial advice, I can't tell you which is better, but you have all the research now and you have all the tools at your disposal to make your own decision and decide what investment you want to make. And maybe it's neither, maybe it's one versus the other, or maybe you decide, hey, I looked at what the analysts had to say. Both analysts have pretty aggressive downgrades on these stocks. Maybe I wait into 2024 and see how maybe the interest rates affect the real estate services sector. If they cut the interest rates, everyone says, oh, if they cut the rates, it's going to be affordable. We're going to be able to buy a house. I don't think that's true. I think if they cut the rates, people are going to sell their houses for way more money. More buyers are going to flood in. So I actually see home prices going up, which in the long run could benefit these companies, despite the fact that a lot of analysts right now are saying, hold on these companies. But there you have it. That's all the information you need. If there was anything that I didn't go over in this video, I probably did so to save on time, because it says right here 17 minutes. Investopedia is a great resource. So if there's something that we didn't cover and you wanted to learn a little bit more about, you can go on Investopedia, or you can ask me in the comments below. Chances are I've made videos explaining what all this terminology is in other videos, and I can tag you in those as well. I might even put them up here on the end screen if I can figure out how to do it. And now I'm going to get back to my matcha latte. Thanks for watching. Have a good day.